I think we're looking at game over, and I wouldn't be surprised if some kind of an armistice is announced within this month. So it's 20th November today.
Yeah.
So in the next 10 days, the war in Ukraine might be over, with Russia winning outright.
Hello, everyone, and welcome to another edition of Triangle Investor Interviews. I'm your host, Lucian Valkovic, and before I announce my guest, just a quick reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy or sell any shares, products, or services. Always do your due diligence and consult with your financial advisor. I'm joined today by Alex Krainer. I believe most of you know who Alex is and that no further introduction is actually needed. Alex, always great to have you, and welcome back.
Good to be with you, Lucian. Warm greetings to your audience.
Thank you very much, Alex. We both returned from Frankfurt from the Deutsche Gold Messe conference organized by our mutual friend Kai Hoffman, and you were a keynote speaker over there. And I had the privilege of listening to your presentation, and the presentation had a very good headline: "Will gold price triple from the current levels?" So let's start with that. Is 12K gold in the cards? Or is it not?
I think it certainly is. The question is when. And what does that mean? As you rightly said in your introduction, this is no recommendation to buy anything. If somebody ventured to buy gold today, they would have to pay something over $4,000 per ounce, which means that, maybe they'll make another $8,000 when the prediction comes true. But that doesn't mean that maybe gold won't fall back to $3,000 per ounce, because prices go up and down. We're not talking about a straight line appreciation. We're talking about a forecast that's, broadly applied to a horizon of 10 years. Why? Because I think I picked this up from Rick Rule. He said that in the 1970s, the last time we had very significant inflation, the purchasing power of the dollar declined by 75%. If that happens now, that would imply that a gold price would triple from where it is today. As with all forecasts, at some point it's going to prove right, because the purchasing power of the US dollar will unquestionably be declining over time. How fast, nobody can say, but since the invention of the establishment of the Federal Reserve Bank in the United States, the purchasing power of the dollar already declined by more than 98%. So obviously it's going to continue, because it's that gradual decline in purchasing power is baked into the monetary system itself. So it's going to continue. There's no question about it. And, who knows, maybe by the time gold is $12,000, it's going to cost $12,000 to fill up your gas tank. You and I lived through hyperinflation in former Yugoslavia, and even in Croatia with its first currency, the Croatian dinar. So we know that with this monetary system, currencies deteriorate and very often end up in hyperinflation. And I think that the dollar is not going to be able to avoid that fate. All reserve currencies over the last 200 years suffered the same fate. But I think that euro, British pound, Japanese yen, Canadian dollar, these currencies are even weaker, and are going to collapse sooner than the US dollar. So anyway, as far as the gold prediction, I think there's no question that it's a correct prediction, but it's actually of no use to investors. I've been in commodities markets for more than 25 years now. And I can tell you that I've seen many, many times traders get the forecast correctly and still get killed
Yeah, me
because
too.
they bought at the price that was maybe too high. They couldn't withstand the correction that happened along the way. They got liquidated, and that was that. And then the price of gold or oil or whatever they were trading did what they said it would do, but it was no use. They already eliminated themselves from the game. So for every investor, they have to do their homework. They have to trade carefully. They have to make sure they are managing their risks very conservatively and cautiously. And given that we're moving into an inflationary period, your main objective should not be to make a killing on these large trades. It should be to preserve the purchasing power of your capital, of your savings, as much as possible. And if you end up losing 50% of your purchasing power in real terms, you have done extremely well, through the whole inflationary period. Because at the end of that inflationary period, asset prices are going to hit rock bottom, and you're gonna be facing a buyer's market for stocks, for real estate, so for all kinds of other assets, bonds. So between now and then, you have to preserve the purchasing power of your money. So don't worry about making 10-bagger trades and things like this. Worry about preserving your savings.
I couldn't agree more. Alex, one part of your presentation was trend investing. Many retail traders and even some professionals still believe that trend following doesn't work anymore in highly intervened, high frequency markets. So, from your 25, just like you said, years of real money experience and the performance of your system models, what is the biggest myth or misconception about trend following today?
It seems to me that there are two schools of thought, and the prevalent one is value investing, and generally, I think that greater than 2/3 of all traders subscribe to value investing. So they analyze stocks and they try to pick up value on the presumption that with time, these stocks are going to appreciate and they're going to make capital gains and collect dividends, which is fine. But it value investing doesn't always work, and in fact, in the recent times, it hasn't worked very well at all. And then when you analyze the performance of the big value investors like Benjamin Graham and Warren Buffett, if you analyze it closely, you realize they're not value investors at all. Warren Buffett is very obviously a momentum investor, which is a different word to say trend follower. And Benjamin Graham, if you read his book, Security Analysis and Intelligent Investor, it's a lot of geeky stuff to read and learn. But then in the postscript to the Intelligent Investor, he tells you that his career returns, more than half of them were attributable to a single investment, in which I think he and Newman invested something like half of their fund. Maybe I exaggerated, but a very, very substantial chunk of their fund. And he says like this one was overvalued from the get-go. It appreciated something like 200-fold while they held it. They never sold it. So they started overvalued stock. It appreciated 200-fold. They never sold it, and they say like, well, we never sold it because we had such a massive investment in it. It was almost like a family business. And then if you take, and that company was Geico, right? Same thing that Warren Buffett purchased completely. If you take Geico out of his portfolio, then he underperforms for 20 years. So he was also a momentum investor effectively. Again, which is a different word to say trend follower. And so for anybody who doubts, I would show them the chart of gold today. Is that a trend or is it not? I would show them the chart of silver. Coffee, cocoa, many. The problem with trend following for many people is that to use trend following, you have to read charts, right? You have to look at price charts. And then you apply what's called technical analysis. And technical analysis, I have to confess, when I started studying technical analysis, when I purchased my first book about technical analysis, I thought it was absolute complete nonsense. I could not even believe that any serious person would even write that book, and then that any serious publisher would publish that book. It seemed complete mumbo jumbo, superstition, and nonsense. Except that I started noticing the exact same thing that I read in the book. I started noticing it in actual price charts of stuff again and again and again, nonstop, all the time. And I started as a fundamentals analyst. I wasn't very successful because it didn't work. Sometimes you got it right, other times you got it wrong, but you couldn't be consistently right, because to be successful as a fundamentals analyst, you would have to be right more often than you're wrong. And I couldn't figure it out. And then I paid attention to other analysts, and I realized that it's the same thing. And then you're also, no matter how rigorously and how well you do your job of an analyst, you're still subject to emotion of greed and fear. You're subject to distraction. You're subject to groupthink. Because if all the analysts that you're aware of, that you read, that you follow, if they all say gold prices are going to crash, then that has an impact on you. You're not completely cut off from what other people say, and so our subconscious and emotional brain is a part of that equation in the end. It ends up influencing your decisions in the market. And fundamentals analysis doesn't really easily lend itself to systematic trading. And my goal from the beginning was to kind of extricate myself from the decision making, because I understood immediately that the distraction and emotional, the fear of loss, the greed to make, that had very heavy impact on investing and on your investment decisions. So trend following, chart analysis, technical analysis, all of that proved to be very useful and suitable for systematic trading. And then when I look at when I look at the performance, the actual trading performance of a number of trend following funds, you see that over long stretches of time, they very significantly outperform things like the S&P 500 and these other hedge funds, which, hedge funds is a funny industry because you'll have some hedge funds will target an industry, like maybe they will focus on biotech or technology or AI. Others industries, maybe they'll go into mining or oil production or healthcare. And sometimes they'll target a geography. So they'll go into emerging markets, or they'll go to, I don't know, Indian investing, Australia, whatever. And they will all have a few really good years when their particular focus of investing, biotech or Australia or, mining industry, they do well. And then these guys look like geniuses. But then when this industry goes into a bear market, then they don't do so well. Trend followers tend to do well in all weather situations, and over long stretches of time, they have much greater longevity. There are trend following funds continuously in operation for over 50 years. That's a very, very rare thing, and you won't find it in practically any other maybe dedicated bond investment funds can have such longevity. And then they will outperform generally most other funds and the S&P 500. So that all suggests that it's a completely legitimate investment strategy, and if you do it well, you should do well.
Again, good point. Let's move to geopolitics. In your recent X post, you described Zelensky as facing a perfect storm on military, political, and public opinion fronts. So my question, what specific missteps by Western leaders do you believe have accelerated Ukraine's collapse? And how might this reshape NATO's role in the new multipolar world order?
Well, missteps started from the get-go because if you'll recall, Ukraine had a coup d'etat in 2014. And after the coup d'etat, it had a civil war because the southern and eastern regions of Ukraine didn't want to submit to the new junta in Kiev. And at the same time, the junta's western sponsors wanted to control the whole country, especially the Donbas, because it's practically 80% of the nation's GDP. It has most of the coal reserves, natural gas reserves, metallurgy, and a lot of these strategic industries there. So they kind of obliged the regime in Kiev to take control of the Donbas by force. And so that's what triggered the civil war I think, in May 2014. However, the United States declined to intervene. At the time, Obama was the president. And Obama said, I guess he was surrounded by some people who could use their brains. And they said, Russia has escalatory dominance in this region, so it wouldn't be good for us to get involved. We'd get our butts kicked, right? So they didn't intervene. 2022, Russia struck the first blow, but Russia was absolutely obliged. They were, all this talk about Russia Russian aggression being unprovoked is nonsense. It was very much provoked. It was provoked in a very determined, deliberate manner. And then NATO, the United States under Biden administration, even Turkey might have been part of. Well, Turkey is NATO. I think that they hope to create a united front against Russia. And fortunately, that didn't work out. Russia was very, very careful to not provoke NATO intervention, so they didn't give them any pretext to join Ukraine in fighting against Russia in Ukraine. And so the misstep was starting the war to begin with. It was something that Obama knew not to do in 2014, but Biden administration was not really Biden administration. Biden was there like a piece of furniture in the administration. The game was played by the neocons led by Victoria Nuland and Anthony Blinken and Jake Sullivan, and they're not necessarily very smart people. That is, they're not stupid, but they're ideological fanatics. And their objective was to destroy Russia, to draw Russia into a quagmire in Ukraine, like Afghanistan, and then hope to topple the regime in Moscow. Many miscalculations in that whole endeavor. And so that was the misstep. I think that it's all falling apart, and it's not that there were the reason why it's coming apart now and why Zelensky is facing a perfect storm on three sides is because there's been a regime change in Washington, D.C. And so Ukraine lost support of the United States. And not only, as I've said, I've been saying this for many months now, that I had the impression that the Russians and the Americans are holding secret negotiations. I think that I had a very strong impression that there were secret dealings between the leadership in Washington and leadership in Moscow, and that at some point we're going to find out, and that all these fights where, Trump says like, oh, I negotiated with Putin, but I'm very disappointed in him. And now we're going to impose big sanctions against them, and we're going to punish Russia, and we're going to furnish some weaponry to the Ukrainians. I think this was all for show for domestic audiences. And as we're now finding out, the Russians and the Americans have struck some kind of a new peace deal, which is not only going to end the war in Ukraine, but it's going to foresee a completely new security architecture for Europe, which is, a radical departure from the status quo of the last 70 years. So I think that it's extremely encouraging, and I think that the part of that change in regime, or change of regime in Washington, there's been this subtle attack on Zelensky, because overtly they've been playing like they're friends with Zelensky, like they support him, like they want to help him. But at the same time, where's danger for Zelensky coming from? There has been this anti-corruption investigation going on that last summer Zelensky tried to squash it by decree disbanding this NABU. NABU stands for I don't know, but in English it's basically an anti-corruption agency in the government. So they started this investigation. There's so much corruption that, of course, they found major infractions done by Zelensky and people around him. Well, particularly people around him, but it's inconceivable that he wasn't aware of it and that he wasn't giving the green light to it. So this agency was controlled by the United States. That's the thing about it. And it was set up ostensibly to investigate corruption, but I think in reality its objective was exactly the opposite. Meaning, they set it up to protect at least certain participants in corrupt practices in Ukraine. Because if you'll remember, Joe Biden, John Kerry, Nancy Pelosi, and some other American official had their children and other family members benefiting from lucrative deals in Ukraine that were completely corrupt. So they wanted to create a shield for them that they don't get exposed for this corruption. Well, now that Trump took over, now the anti-corruption police started doing its actual job. And then when Zelensky realized that he tried to disband them, but it was too late because, the United States still controls Ukraine for all intents and purposes. And so the details of the corruption investigations leaked out. They were published in Ukrainian press. People are absolutely disgusted. As a result, the Ukrainian armed forces their morale has collapsed. They don't want to fight anymore because they're fighting and dying in these muddy trenches in order to protect a government of corrupt war profiteers. And so we've seen surrenders. We've seen them surrender in droves to the Russian forces. Desertions have reached over 160,000 soldiers this year alone. And people don't want to fight anymore. So they're losing militarily to the Russians. Armed forces of Ukraine are collapsing, and the public opinion is now completely incensed against Zelensky. In fact, he ran off to Turkey to try to rekindle peace negotiations with Russia, or at least pretend that he's doing something so people don't storm his palace with pitchforks.
Yeah.
And so
I-
I think we're looking at game over, and I wouldn't be surprised if some kind of an armistice is announced within this month. So it's 20th November today.
yeah.
So in the next 10 days, the war in Ukraine might be over, with Russia um, winning outright.
Yeah, that's bold prognosis, I gotta say. Okay, Alex, in light of this deal between the United States and Russia, what do you think? Will anybody ask anything to Europe, to European leaders, or it's completely ignored?
I think that the Europeans are going to be involved, but not as equal participants. I think that they will be uh, forced into signing on to the new security architecture that has been planned by the Russians and the Americans. And to explain this a little bit, what we have had over the last 70 years globally has been basically based on the British geopolitics. It's called balance of power architecture, where you're always pitting a force against a force, and you're always creating these crisis flashpoints where you can easily destabilize a nation or a whole region. We've lived through that. You know, we've seen wars in former Yugoslavia. We know that Greece and Turkey have always been at loggerheads on the verge of some kind of a nasty escalation. We know that the Polish are deliberately antagonizing the Germans and also the Russians. Um, we see now, let's call it diplomatic tensions between France and Italy. There's a lot of that, especially under the surface, because on the facade, as Ursula von der Leyen would say, like, we have unity, and everything is wonderful. But behind the facade, there are many, many cracks. And, the British have been brilliant at exploiting these cracks to instigate wars. And then the same thing exists practically worldwide, because, when the British left India, they made sure to partition it between Bangladesh, India, Pakistan. And that's always a gift that keeps on giving. Then you have, Turkey, Armenia. Then you have Armenia, Azerbaijan. Um, you have Lebanon, Israel. You had Syria, Saudi Arabia, Iran. Um, it's just the whole, practically from the Baltic Sea down to the Eastern Mediterranean, and then across this southern crescent of the Eurasian continent all the way to the Koreas. Oh yeah, the Koreas got divided also between North and South Korea. China, they carved away Taiwan for future use. The whole thing is a string of crises that are always reactivated, and you have practically permanent warfare on the continent. And so I think that if that architecture of not security but insecurity becomes overhauled to create a genuine real peace architecture, backed by the Russians, backed by the Americans, but also by Iran and China and the whole Shanghai Cooperation Organization, then perhaps the continent might look to the future of permanent peace rather than permanent war. So I think that's a very hopeful prospect, and based on everything I know about this so far, my very strong impression is that this has a real chance of taking off.
Okay. Final topic: financial markets, global financial markets. I want to hear your take on the markets. I mean, we were talking about the trends. So we have like 15, 16 years of bull market. Okay, we had like COVID crash that recovered very fast. What do you think? Is this trend over? What is actually fueling this rally? First, it was of course, the liquidity. We had printing of the money. I get that part. Now we have the Nvidia, the AI. What's next? What will fuel the market next? Or can we expect really some crash? Or we are in for the next 10 years of sustained growth? What do you think?
Um, I think it's always liquidity, and I think it's always been liquidity as the predominant driver of stock prices, of asset prices in general. So for as long as central banks create with their create liquidity, continue with their quantitative easing policies, asset prices are going to rise. Not necessarily all of them in concert, but probably stocks, real estate, things like that. Bonds, I'm not sure. I think that we might see a brutal bear market in bonds, particularly in Britain and Europe, probably Japan as well. And then well, okay, let me put it this way. And I've been, this is not a new prediction. I've been predicting this probably for more than 10 years now. Given that the central banks have no other way to resolve these crises other than with printing money, they will continue to print money. That is, they do have other options, but they are so politically unacceptable, they would immediately lead to violent revolutions. So printing money is the only politically palatable option because you can you can manage the crisis over a long period of time, and you can create inflation. And that inflation is going to not only dilute the purchasing power of money, it's also going to dilute away the debts, right? You're going to pay back all the debts with worthless money. What typically happens, it's practically a syndrome of when governments or central banks print large amounts of money over long periods of time, is that you get basically you get the bonds and the currency to collapse, and you get stock markets to go vertical. So we've seen that in Argentina and in Venezuela in the 2015, 2016 when it was. We had the same thing happen in Israel in the 1980s. Zimbabwe 2008, 2009. Weimar Republic in German Weimar Republic 1922, 1923. So it's always the same thing, but unfortunately for investors is that they tend to get wiped out even though stock markets go vertical, because the loss of the money in a hyperinflation, the collapse of the purchasing power of money far outstrips the appreciation of stock prices. So it's usually, well, in Weimar Republic it was 10-1. So even though maybe you made a killing on stocks, you still ended up losing 90% or more. So I'll go back to the piece of advice I tried to convey at the beginning of our talk. Investors need to try to preserve their purchasing power, because once this whole crisis unravels, you're going to be able to buy things for pennies on the dollar, literally, stocks, real estate, houses, land, businesses, and so forth. It's just because most people are going to end up completely wiped out, and they're going to have no purchasing power left. So they're going to be parting with their assets for whatever. At the end of the Weimar Republic, If you had US dollars in 1923, you would have been able to buy a 6-bedroom villa in the nice neighborhood of Berlin for 100 US dollars. That's how badly the asset prices deflate. And that's also, to people who think that real estate is a hedge against inflation, it isn't. There's only 2 asset classes that are effective hedges against inflation. One of them is commodity prices, and the other one is farmland. Everything else, you're taking a risk of getting wiped out.
Even gold?
No, well, gold is a commodity in general, but people buy gold and silver. That's fine. That's a good idea. But prices of energy are going to go up. Prices of agricultural commodities are going to go up. And then it's good to diversify. If you're even in any kind of a position to trade a diversified portfolio, you would always be better off allocating some money to gold, but then also some money to natural gas, crude oil, copper, palladium, platinum, corn, wheat, soybeans, cocoa, coffee, and then, because gold, as we discussed, is going to go up precisely to $12,000 an ounce, but it could sustain very brutal corrections along the way.
Yeah.
And so if you're more broadly diversified, then, it's easier to accommodate these corrections.
Totally. Alex, how can people reach out to you? How can they become your subscribers? Tell me more.
So I have 2 publications on Substack. One of them is a daily trend following newsletter called iSystem Trend Following, which communicates trading signals for a set of 17 or 18 global markets, including gold and Bitcoin. So that's iSystem Trend Following on Substack. My other publication is a personal Substack where I write not as frequently, but let's say maybe articles that are a bit more thoroughly researched and better refined. That's called Alex Krainer's Substack. And I'm also active on X. My handle is @NakedHedgy. And so for anyone reaching out to me, I would beg them for a lot of patience, because I'm a little bit overwhelmed with the volume of correspondence. I'm very grateful for it, but getting through it all it takes me a long time. And if you don't hear back from me, a reminder is never wasted on me.
Okay, so final message for investors. If you have to put it in 3 words, it will probably be preserve your wealth, right?
Yes, correct.
Alex, thank you very much for joining me today.
Always a pleasure, Lucian, and until the next time.